A very good morning and good evening to all of you, and thank you for joining us today for the Dr. Reddys earnings conference call for the fourth quarter and the full year ended 31st March 2018. Earlier during the day, we have released our results and the same are also posted on our website. We are conducting a live webcast of this call and a transcript shall be made available on our website very soon. The discussion and analysis in this call will be based on the IFRS consolidated financial statements. To discuss the business performance and outlook, we have the leadership team of Dr. Reddys comprising Mr. G.V. Prasad, our CEO, Mr. Erez Israeli, our COO, Mr. Shauman Chakravarti, our CFO, and Mr. Anil Namboodiripad, who heads our proprietary products business, and the investor relations team. Please note that today's call is a copyrighted material of Dr. Reddys and cannot be rebroadcasted or attributed in press or media outlets without the company's express written consent. Before I proceed with the call, I would like to remind everyone that the safe harbor language that is contained in today's press release also pertains to this call. Now I would like to turn the call over to Mr. G.V. Prasad, our CEO.
Thank you, Sonak. Good morning and good evening, friends. Thank you again for joining us today. We have concluded a challenging year with a relatively muted fourth quarter performance, primarily on account of disruption in the channel sourcing pattern in Russia and higher competitive intensity with respect to some key molecules in our North America generics business. During fiscal 18, we invested significant effort and resources in the foundational areas, namely strengthening our manufacturing and quality system, optimizing our cost structure, and of course revitalizing growth. I'm satisfied with the progress we are making on this journey, and I do expect to see the results of these efforts during the current year. There is, of course, more to be done, and we remain firmly committed to this path. I'd like to take this opportunity to introduce to you our new COO, Erez Israeli. As you are aware, Abhijit Mukherjee has retired recently, and after his retirement, Erez joined us in April this year as Chief Operating Officer and Global Head of Generics and PSAI Business. In addition to the responsibilities that Abhijit handled, Erez also handles the R&D function as well as the biologics business. Erez joins us with over 25 years of experience in the pharma industry and proven leadership in general management and handling large-scale global operations. He joins us from Enzymotech, where he was President and CEO. Prior to that, he spent 23 years in Teva Pharmaceuticals, where he held several leadership positions, and he has also had stints in certain corporate functions and briefly as the head of the global quality function for Teva. Erez will be based out of Hyderabad, and he will lead all aspects of the global generics and PSAI businesses. We are pleased to have him on the management team and look forward to his contribution to bring us back to industry leadership with sustained growth and profitability. I now invite Shauman to take us through the key highlights of the quarter.
Thank you, Prasad. Greetings, everyone. Let me begin with the key financial highlights. For the section, all the amounts are translated into US dollar at the convenient translation rate of rupees 65.11, which is the rate as of 30th March 2018. Consolidated revenues for the year are at rupees 14,203 crores, that is $2.18 billion. Consolidated revenues for the quarter are rupees 3,535 crores, that is $543 million, and declined 1% year-on-year and 7% sequentially. Though the sequential decline was on expected line, there was further softness in the Russia and North America generics revenues. In Russia, we witnessed some shift in the channel sourcing pattern emanating from seasonal variation. Also, if you recollect, we had a one-time out-licensing fee with respect to DFD-06 in the previous quarter to the tune of $20 million. During this quarter, we accrued a follow-on milestone of $2.5 million. Revenue from our global generic segment were $428 million and PSI segment were $96 million. Consolidated gross profit margin for the quarter is 53.5%. The above mentioned sequential decline largely addresses the reduction in the gross margin. Overall, on account of the lower revenue base, there is also an element of manufacturing overhead deleverage, which needs to be factored in. Gross margin for global generics and PSAI were at 59.3% and 24.2% respectively. The SG&A spend for the quarter is rupees 1,207 crore, that is $185 million. This is on the same line as that of the preceding quarter and 10% higher compared to in previous year. This quarter spend also considers some of the year-end activities around ANDA filings, and hence it's a bit higher. Overall, as we have mentioned earlier, we continue on our journey to improve the spend productivity, and the resulting impact will be more visible during the quarters to come. R&D spend for the quarter were at rupees 435 crore, that is $67 million, representing 12.3% to revenues, and is in line with management estimate. For full year, it's 12.9%. Overall, there is no change in the focus on the long-term strategic outlook. However, we are taking a calibrated approach in terms of the project prioritizations and selection. The resulting EBITDA for the quarter stands at rupees 578 crore or $89 million, which is around 16.3% of the revenues. For the full year FY18, it is 17%. The effective tax rate is coming to around 19% for the quarter and 32% for the full year. Normalizing the impact of the recent amendment in the U.S. tax laws, the effective tax rate for the full year is 22.6%, which is within the range we guided earlier. On a reporting basis, we end the year with an EPS of rupees 59. Again, normalizing for the impact of the U.S. tax law amendment, it would be around rupees 67 or so. Overall for FY18, we generated operating cash flows of around $277 million and reinvested $140 million towards capital investment. During the quarter, we generated operating cash flows of around $83 million and the operating working capital decreased by $13 million. Our net debt equity ratio is 0.24 as on 31st March 2018. We continue our focus on optimizing the same. Foreign currency cash flow hedges for the next 10 months in the form of derivatives for US dollars are approximately $255 million, largely hedged around the range of rupees 65.14 to rupees 68.23 to the dollar. In addition, we have balance sheet hedges of $219 million. We also have foreign currency cash flow hedges of 1,350 million rubles at the rate of rupees 1.12 to the ruble, maturing over next 10 months. With these, I now request Reddys to take through the key business highlights.
Thanks, Showman. Greeting to all the ladies and gentlemen, and I extend a warm welcome to you on this earnings conference call. For long, I have known Dr. Reddys from the outside. I am honored to be part of Dr. Reddys' team. Dr. Reddys has a high focus on innovation and a fine balanced approach to the market between pure generics and branded generics. Over the coming few months, we will continue to focus on growth opportunities and optimize our cost structure. Let me take you through the performance highlights across key markets and businesses for the past quarter. Please note that in these sections, all references to numbers are in respective local currency. Our North America generics revenue for the quarter are at $222 million, registered a sequential decline of approximately 10%. As indicated earlier, the sequential decline was predominantly driven by high one-time sales of Sevelamer launch during limited competition phase in the third quarter, coupled with full quarter impact of WBED Econdis price harmonization activities for our base portfolio. The value erosion driven by incremental competition in some of our high-value assets like decitabine and azacitidine further contribute to this decline. On the new launcher front, we had fairly decent quarter. Overall, we launched 3 products in North America during the quarter, which including the commercialization of the first-to-market asset, palonosterone for injection and OTC levocetirizine. Beyond the performance this quarter, overall base business has held up reasonably well in line with our expectation, and we remain optimistic about eventual stabilization in generic market space over medium term. On the pipeline front, coming quarters are likely to see a fairly good number of new launches scheduled, including some high-value assets. We continue to make reasonable effort toward bringing first-to-market generics for the complex assets in our pipeline. Let me update you on the status of 3 key near-term launches, generic Suboxone, generic Novaring, and generic Copaxone. On generic Suboxone, we have responded to our agency. We are closely watching the IP scenario, and our actions would be in accordance with the developments around the litigation fronts. On the second asset, generic Novaring, we understand that the file is in active review. However, given the fact that this is a complex drug-device combination product, we await for agency feedback on this. We remain optimistic on the launch of this asset in this fiscal year. Finally, on generic Copaxone, we are shortly going to submit a comprehensive response to the agency on earlier DMF-related queries. Overall, we continue to actively engage with the agency on many complex assets in our pipeline. Beyond these near-term launch opportunities, we are committed to augment our pipeline with complex assets to sustain long-term growth for the company. Our Europe generic business revenue were 22 million euros. The quarter's revenue were impacted by temporary disruption in supplies for few of our products. This is expected to be back on track soon. Our emerging market business performance for the quarter got impacted by lower offtake of Russia. Russia revenue at 2,258 million rubles declined 25% year over year. This was primarily attributed to a temporary shift in the channel purchasing pattern led by a seasonal variation. To subsequent periods, we are witnessing improving trends. This aside, we continue our focus on new product launches, entry into new markets such as Brazil and Colombia, and geographical spread of our oncology institutional business. Performance in other markets has been in line with our expectation. Overall, we remain optimistic toward the double-digit growth rate in FY19. Our India business revenue are at 614 crores rupees. Though the growth is flat, sequentially it's 7.5% year over year, normalized for the good and service taxes transition related adjustment, it's around 16% year over year. We are seeing progressive improvement in the business performance over the last few quarters, and we strive to perform better than the market through fiscal 2019. Overall, we remain optimistic toward the double-digit growth rate in FY19. Our PSAI business revenue are at $24 million. $94 million, sorry for that. Our efforts are direct toward improving the supplies and building a healthy order book. Our proprietary business during the quarter, we received a follow-on milestone of $2.5 million with respect to DFD-06. As you are aware, toward the end of the quarter, we have filed DF-02 with the US FDA, and we are awaiting grant of PDUFA date, which is estimated toward the end of January 2019. Pre-launch preparations are ongoing for an estimate launch of the product in Q1 F20. Overall, we continue to focus on building our existing commercial footprint and also enriching the development pipeline. On the commercial side, we are experiencing increase in the prescriber base and volumes for our lead products, Zembrace and Cernivo. And with that, I would like to open the floor for questions and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Also, as a reminder, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. If you have any further questions, you may come back for a follow-up. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Manoj Garg from HealthCo. Please go ahead.
Hi, thank you. A few questions for me. So with the ongoing structural changes that you talked about and that we're seeing in the U.S. market on the buying patterns, can you talk about how you're adjusting your cost infrastructure or portfolio to reflect these new realities? And I'll just quickly ask my other ones and then go back on mute. On Russia, the 25% year-on-year declined on account of lower offtake by the channel. Does that mean destocking? And then lastly, on generic Copaxone, you had indicated on your last call that you had received queries on the F, but that you should have a response in 4 to 5 months. So I was wondering if you could provide us an update there in terms of whether those responses had been submitted to the FDA. Thank you, and I'll go back on mute.
So this is Erez. Thank you for the questions. So on the first question on the adjustment to the U.S. recent trends, naturally, so on the portfolio side, the main thing is naturally to continue to work on a very promising portfolio, and we are diligently working on this, plus naturally to clear up and with the FDA the certain qualities issues from the past. This will serve us well in the future. And we are actively engaging on the cost as well, and naturally looking into cost optimization in many assets that we may have. On the Copaxone, we are targeting to respond to the CR in the next couple of months, so we did not submit it yet. Post that, we will be having a new goal date. Right now, it's too early for that. We do expect approval and also dispose sometime in the first half of the next fiscal year. And as for Russia, yes, it's an uptake of the chains. We believe that it's a temporary, and we believe that we will be in normal patterns in the next coming quarters.
Next question, please.
I'm sorry. So I'm sorry. It was a little bit difficult to hear. So on Copaxone, you're saying that you expect to refile the data that the agency had requested in the first half of fiscal 19. Is that correct?
No. This is different. So let me clarify. We are targeted to respond to the CR in actually the next couple of months, already in this fiscal year, with the anticipation that the launch of the product will be sometime in the first half of the next fiscal year.
Okay, so in the first half of fiscal 20.
Yeah, that's right.
Okay, all right, understood. Thank you.
Thank you. The next question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you so much for taking my questions. Can you please update us on, the status for Duvada and Srikakulam? One, when can we expect, us inviting the FDA for an inspection in Duvada? And second, what is our sense on Srikakulam? Would that require a re-inspection too?
So on Srikakulam, we are not yet clear whether it would require a re-inspection, because the inspection that happened was fairly straightforward. But the FDA has asked us to do some additional work with respect to past years of both on the investigations and data. We are doing that, and we expect to fulfill the request that the FDA has made of us in the next month or month and a half. And after that, we will have to ask the FDA what next steps would be. Duvada, I think we've done a lot of work on remediation over the last 12 months. We expect to go back to the FDA end of June and request a re-inspection. So, we cannot predict when they'll come, but it should be several months before they come back and inspect us.
Fair enough. Thank you so much, sir. And my second question is, on NuvaRing. Did I understand correctly that we are going back and forth with the FDA with more queries after, our response to the, queries that we'd received as per the last, earnings call? So would that mean this would probably be a second half, late FY19 product?
So the point is, what we're trying to put out is that in the earlier call we had mentioned, if you recollect, that there are certain queries which had come in and we were working on them. So at this point in time, we are closer to the end point. So that's why we said that on the same set of queries, we have balance around, couple of months of working before we reach out to the FDA and provide them all the comprehensive inputs. So that is the thing, and then henceforward, from that point in time, we wait for the FDA to guide us further.
Okay, so that would mean this is a later second FY19 opportunity in that case.
Possibly.
Yeah.
Okay, thank you so much, sir.
Thank you. The next question is from the line of Sebastian Sauter from RBC Capital Market. Please go ahead.
Yeah, hi there. Good afternoon. Thank you for taking the questions. Sorry, you may have mentioned it in the business highlights earlier on just now, but I think my line went a bit funny. So I'm just wondering if you could provide a little bit of color around the generic Suboxone, please. I understand you said, if I've heard correctly, you said you've spoken to FDA and you're closely watching the IP situation. I was just wondering if I heard that correctly and if you could just provide a bit of color around this. Thank you.
So as we stated in our last earnings call, we received a minor CR in the mid of January. We responded to this CR in mid of March. And basically now we are in discussion with a new goal date, probably mid-June, or for that. So we believe that the file is progressing in the right direction. As for the launch, again, we believe that we have a good IP position, but naturally we need to see how this will fold out. So on that aspect, whatever this will fold out, it will create an opportunity to us.
Okay, great. Okay, so just to... You said the new goal date is around mid-June, is that right?
This is for the FDA.
Okay, yeah. Okay, great. And so what sort of launch date do you think would be realistic?
It depends on the IP situation. Unfortunately, we cannot commit to that in that respect.
Okay. Okay, thank you very much.
Thank you. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thank you. Beyond these three key assets that you talked about, what else do you think you have for launch pipeline for fiscal 19?
Sameer, we have not been generally discussing specific products in our portfolio.
Yeah, no, without going into names.
So if you are specifically asking, say, FY19, what could be the number of launches in US market? Normally, every year we say based on our portfolio and our investment, we are prepared for 10 to 15 launches, but this year, FY19, it could be 15 plus.
Over 15.
Okay, and of these 15 plus, other than these three, could there be more niche launches or others are all Me Too's?
It's a blend. It's not all Me Too's, not all special products. It's a blend.
Okay, no, great. Thanks for this. And a couple of products which you had exited and which are sort of in public domain, products like Xanatane, where you had supply issues. So when do you think you can come back in the market?
Xanatane,
if you can just update us on it.
So Xanatane, we had some issues. We are refiling that, so it will come back in a few months. We have finished our work and we are filing soon.
Okay, and Gleevec and Daptomycin?
Gleevec also will be a launch in this fiscal year, hopefully.
Okay. Okay, great. And sir, just one more, with your permission. So I'm a little confused on your commentary on NuvaRing and Copaxone, and here it is. So NuvaRing, I thought the TAD was, I think, somewhere around July. And given that this is the first ever generic approval, FD generally accelerates these kind of launches. So why do you think you would be coming in end of fiscal 19? That's question number one. And question number two on Copaxone, once you do respond to FDA in next couple of months, again we are looking at what, June, July, why do you think your launch would be first half of fiscal 20, which is giving another 9 months to launch? I mean, why do you think after multiple submissions on Copaxone, why would still this submission take that long?
So, Sameer, on the NuvaRing portion, the thing is that, as you all know, it is a drug-device combination. And as far as the FDA protocol goes, so there is, the file review goes through multiple, sections and departments. And considering it's a drug device, it also goes through additional rounds of clearances. So the point that we were trying to emphasize was more in terms of that we acknowledge the complexity of the product and let's see it out. We don't know either way. So the point we wanted to make was that from our side, we have responded to the queries and we wait for FDA.
And we might get one or two more queries.
So that's more from that perspective. The second one you were putting on Copaxone, so if I understand you correctly, see the thing is that in the last call, if you recollect, we had mentioned there is the additional set of activities that FDA had asked us to do, something which will take around 4 to 5 months at that point in time, what we had commented. So a large part of the work has been done. It's ongoing. We now have a very clear-cut view of what exactly needs to be done. And based on that, we have a visibility that within the next couple of months, we should be in a position to reach out to FDA and provide the info. Now, then it rests with the FDA, and as you all know, considering if it's a major CR, the turnaround time can anywhere between 8 months to 10 months from an FDA perspective. However, we will definitely engage with them, try to push them for an early clearance. And so that's how we kind of looking at this asset. And just to be on the safer side, we have put that view.
We can only get a new goal date after we file our CR response. So when it comes back, then we will know what is the CAT. So a commentary that we can have in the first half of next fiscal year is more kind of a on a conservative time frame of 8 to 10 months.
Okay, great.
Is that clear, Sameer? Yeah.
Yes, it is. Thank you.
Fine. Thank you.
Thank you. The next question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Yeah, hi. Thanks for taking my questions. I have a few on your proprietary portfolio. So basically on DFN02, just wanted to understand how this asset is differentiated when compared to other nasal sprays on the market.
I think we should ask.
Yeah, hi. I'll take that. DFN02 is a nasal formulation of sumatriptan, as you know. We have established that the pharmacokinetic profile of DFN02 is comparable to that seen with injections. We have also established the efficacy profile through a clinical study that was conducted and completed more recently. The difference from other nasal products is that no other nasal product that exists within migraine has been able to show the type of efficacy that DFN02 has shown in terms of comparison with an injection. If you look at the original nasal product that was launched by GlaxoSmithKline, the Imitrex nasal, because of the absorption of the drug or lack of absorption of the drug through the nasal mucosa, the efficacy was only slightly better than the oral, and therefore it did not see much uptake. In contrast, with DFN02, we believe that given the absorption pattern and the similarity of efficacy or closeness of the efficacy to what we see with injections, we will see a completely different receptivity to the drug. Hope that answers your question.
In absence of head-to-head data comparing DFN02 with a sumatriptan nasal spray, would this be claim acceptable?
Yeah, I mean, if you look at most of the studies that have been done in the space, they have been done against placebo, and that is what's required by the FDA. But given just the absolute patient experience, we believe that physicians would be convinced to prescribe the drug.
Okay, so we
do have head-to-head data against on the pharmacokinetics. We do have head-to-head data against the injection, by the way.
Right. So you mean that translates into clinical benefit too, and that has been observed in clinical trials?
That's correct.
Yeah. Okay. And secondly, on Cernivo and Zembrace SimTouch, what are the milestones that we should look for, which should kind of put more growth into these opportunities? Because it feels like they have been stagnating at current levels for a while.
Yeah, actually, they're not stagnating. Let me give you some metrics that will provide more clarity on the two products. I'll start with Zembrace. If you look at the performance in FY17 versus FY18, prescription volume grew by 88% for Zembrace, and the prescriber base grew by around 48%. So that's one metric to follow. What is the rate of growth of prescriptions compared to previous quarters or previous years? The second is how many new prescribers have we added in this year? So in FY18, we added 1,400 new prescribers for Zembrace. What that tells you is that the product, as it's being experienced by patients, encourage physicians to prescribe more. The other part is coverage. Coverage as in, insurance companies willing to pay for the drug. If you look at that, for Zembrace, in fiscal 18, we were able to get a few big wins in terms of large managed care organizations or insurance organizations that were willing to reimburse the drug. So those are the metrics that you need to continue to follow. That is prescription growth and prescriber growth. Now, for Cernivo, it was a bit more muted than for Zembrace. The prescriptions grew by about 13% in FY18 compared to FY17. However, number of new prescribers was around 1,800 for FY18. So that's another metric showing that Cernivo does have the potential. What really held back Cernivo in FY18 was that we were not able to secure coverage by some of the larger plans that would be required in order to drive prescription or volume growth for this asset. But in FY19, we expect to see more coverage. As I had mentioned in previous quarters, we have put in place a systematic process to approach insurance companies and negotiate with them. We have a team in place for that, and we believe we have strong capabilities now moving forward to ensure appropriate coverage. Does that answer your question?
So, should we expect the numbers also for your proprietary products to move up in tandem because they haven't moved up as much?
No, I mean, actually, you should expect, you will see improvement in the numbers as we move along. And again, it is contingent on how we do on the coverage front. But I can just give you an example of Zembrace, where there's a clear correlation between coverage and performance. Zembrace, we tripled the net sales between FY17, full year of FY17 and full year of FY18, and we expect continuous growth. So, Nivo, we will, based on how we do on coverage this year, you should be looking for revenue numbers to grow as well.
Right. And finally, on Zenavort, which you licensed to that.
Mr. Manjana, may we request you to come back in the queue for a follow-up, please?
Yeah, sure.
Thank you. We take the next question from the line of Surya Patra from Phillip Capital. Please go ahead.
Thanks for the opportunity. So just wanted to have a sense.
Excuse me, this is the operator. Mr. Patra, there seems to be some static noise coming from your line. Can you use the handset, please?
Okay, 1 second. Hello?
This is better. Thank you.
Yeah. So just wanted to have a sense on the base business, base US business. So we have already seen the kind of impact of what of the channel consolidated and all that. So the challenges what we have been discussing since last 1 year or so. But going ahead, what is the kind of visibility that we are having about your base business apart from the new launches that we are talking about?
So it's very difficult to speculate what would be the scenario of price erosion in U.S. market. As you know, consecutively for last 3 years, it has been a double-digit, moving up to mid-teen to high-teen.
Yeah.
So last year, at the same time, we felt within the 2 consecutive years it has happened. Probably this is the time it will stabilize. So this time also we can just hope it will stabilize a bit, but we cannot speak emphatically. Only thing, we don't see more consolidations happening, as you have said. So that, it's all a factor of customer consolidation and new competition. So we'll have to just, watch and observe and appropriately respond to the competitive scenario.
Okay. So just differently, if I ask the same question, see, whatever the kind of erosion or whatever that normal erosion the base business witnesses every year, if you factor that and if you just leave apart the kind of a special product, what we have been talking, then based on the kind of a new product, new Me Too product or Para 3 product, what we are planning to launch, so put together whether there is a positive delta in the base business or in the US business or not, if I ask that way.
Given that we are hoping that there could be, 15 plus kind of a launches which happens. And some of that, whatever we have launched in the last 3 years, every year then, in the consecutive years that becomes part of the base.
Correct.
Again, it depends a lot in terms of price erosion. It is very difficult to respond straight away. If price erosion comes back to a single-digit kind of thing, then probably we can hope to, grow even in there. But normally we factor in, that there will be price erosion, there will be a decline in base, and we focus more on approval and launches to make it up. And actually, if there are significant launches, then we can grow. And that's how we factor in terms of US business.
Okay. And regards the proprietary product or the NDS, what we have launched or we are planning to or we have been discussing. So what is the kind of whether the NDA contribution has become like relatively meaningful as of now, or when will we really see the number?
Yeah. For the proprietary products business to become meaningful, I think we'll have to wait another couple of years.
Okay.
With the DFNO2 launch would be the first uptake, and after that we should see significant growth.
Just on the biosimilar, if you can update us. That is the last question from my side.
It's a very broad question. Update. What update do you want?
So, like, is there any progress that we are filing in terms of any new market or any product?
We have been rolling out rituximab to many emerging markets. We are planning a trial in the U.S. And
okay.
It's a bit early, but we are planning to take rituximab to the developed markets.
Okay. And so whether there is a kind of a planned R&D spend program is already been set for the biosimilar for current financial year, or?
So we know how much it costs, but we are looking at whether we should finance it ourselves or partner with somebody.
Okay.
But the asset is moving forward.
Okay. Okay, fine. Thank you, sir.
Thank you. The next question is from the line of Nimesh Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for taking my question. Just two questions. One on Suboxone. With the evolving litigation landscape, are we still confident of making an at-risk launch if we get an approval? Or it will then, or has there been any change in that strategy?
We cannot give you that level of specificity in the strategy.
Okay, I mean, you
earlier milestone is to get the approval.
I'm sorry?
If you get approval.
So we are focusing on that. We are not going to, at this point of time, speak further on our strategy.
Okay, is it fair to assume that approval is the only hurdle here?
No, we cannot give you that level of detail. We will be giving away a strategy which we can't do at this point.
Okay, fine, no problem. And just one understanding on the domestic piece that you mentioned that, adjusted to GST, the growth has been higher. So, I mean, why are we adjusting to GST in this quarter? I mean, I thought it was over last quarter. So, I mean, just for our understanding.
So this adjustment, GST adjusted growth will continue from the time GST has been introduced. That was from 1st of July. So one more quarter, we'll have to do the same kind of a thing. Because what happened with GST, the excise duty kind of thing gets changed. And also, so we do a very like-to-like kind of a impact. Had GST not being there, what would have been the growth? And that's why we get the figure. Okay.
So in that, we only kind of factor in the reduction in excise duty component, I mean in gross to net. Is that the only adjustment we make, or is there anything else?
Like to like, we remove GST and ED and compare the numbers. That's what we will do.
So you can discuss offline with Sonos to get further details. So it will be only applicable for one more quarter. After that, of course, the numbers become Q2 onwards, it will be like to like.
Okay, fine. Thank you.
Thank you. The next question is from the line of Kartik Mehta from Deutsche Bank. Please go ahead.
Yeah, hi. I had a question on the R&D cost. How do we see this in absolute amount? There has been a reduction on a YOY basis. I think it was in the Q2 call or in the Q3 call we had mentioned that second half R&D cost is likely to recoup back. That in absolute terms is almost the same as we had in H1. In fact, it is actually lower. So how should we look at this, Prasad, and in terms of...
If you take the full year numbers, don't look at quarter on quarter because that depends on the timing of what we do and how we pay and how we incur the cost. So At the absolute level, this 12 to 13% is something that we should have at the same level even going forward.
Do you see any areas where you can still maybe bring it down as we did in FY18 or FY?
We are doing, but at the same time, if we are investing in clinical development of proprietary products or biosimilars, that will offset the savings we have. There will be some reallocation of how we do our R&D spends, but at the absolute level, it should remain at where it is.
Okay. And on the tax rate, is there any guidance that you can give whether it will be for FY19?
So, in terms of the effective tax rate for last few years as well as this year, what we have guided to and what we have actually done, adjusting, some of the one-off events which is happening for the year, is between, say, 22 to 25% in this range. So, it will remain in similar kind of thing. This year, even though it is not a tax, kind of a tax, but because of the Trump tax law which came up in USA, we had to take some deferred tax assets adjustment, which happened partly in Q3 and partly in Q4. So overall, 130 crores additional impact has been there. So that has taken the ETR off for the year. But if you adjust that, then overall ETR for the year is 22.5%.
Thank you. Thank you.
Thank you. The next question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Hi, thanks for taking my question. Prasad, in the last call, when you came last, you talked about hundreds and crores of cost saving, which will be visible by fiscal 19. We are halfway through that. What do you say we have achieved so far of whatever your targeted cost saving was, and how much is left and which we can see in fiscal 19?
So cost saving has been successful. We are seeing relatively flat cost structures in multiple areas and also reduction in some areas. It's a journey. We have saved in the range of hundreds of crores, and it's an ongoing journey. We will continue to do that.
I was just wondering, has a large part of it has been achieved or will be achieved in, the next year?
Significant progress has been made, and we'll start seeing the effect even in 2019. But 2018, you saw partial effect. 2019, we'll see a full effect of that saving.
Okay, thank you. On biosimilar PEG-GCSF, do you have or can you share some timeline with respect to when you can make filing for the U.S. market?
Later on this year, I think Merck Fresenius should file the biosimilar application. The clinical trial is over. I think they're just finishing the reports. In the next few months, it should be filed.
Next few months. Okay. And finally, on the PSA segment, I just wondering in general, there has been this comment of API prices moving up because of certain capacity constraint in China. How does this impact for the whole business and for the PSA segment in particular, and how should we think about growth and margin in the following year? Thanks.
So, yes, in some of the, the key starting material or ingredients that we would have been importing from China has seen some increase in their price, you're right, because of, certain Chinese government stakes and some of the industries closing down there. So, you see, our overall cost optimization initiative, you will not get to see the full reflection in SG&A line because, there are some things which comes and then will sit in the cost of revenue. Now, in one hand, you see so much of, price erosion in North American market, but if you see the overall gross margin, the reduction is much lesser compared to that. So we'll have to look at overall how much effort is going on cost optimization, the benefits that you are getting may not be completely visible to you only through the SG&A analysis.
But at the absolute amount you will see.
Yeah, absolute impact in terms of profit that you will see. Yes, some of these things have gone up, but we have been trying to see wherever there have been opportunities otherwise.
And any comment on growth and outlook for PSAI you would like to make?
Not going to be that specific.
Okay. Thank you.
Thank you. The next question is from the line of Anmol Ganju from JM Financial. Please go ahead.
Yeah, hi. Thanks for taking the question. I have two questions. One is that from a regulatory calendar standpoint, how does FY19 look like? What is it that you consider to be the most significant regulatory timelines from an FY19 perspective? And my second question is, again, a slight repetition of the earlier question. On the cost optimization front, just trying to understand it better, you've had 2-3 quarters since you embarked on this program, embarked on this journey of saving hundreds of crores in costs. What is the lowest hanging fruit that you seem to have identified? And are there any very visible or stark non-core areas out of which you would like to exit, and how should we be thinking about it? Thanks.
So, in terms of the most important assets, it is clearly generic Suboxone and Novaring. Glati is there, but further down. These are the big assets. To your question on cost, there is opportunity in many areas, from rationalizing our manufacturing network, optimizing our portfolios, removing wastefulness in many areas, including mining levels and multiple places. And we so far have not touched the core. It's only looking at areas where we can save without any impact on operations. Going forward, we will actually see divestments of some sites and also other non-contributing expenditures that we have. So it's a programmatic approach, and we'll continue doing that.
Okay. Thanks, but I think you didn't hear my first question properly. I was referring to the regulatory calendar, not the big product assets. So, in terms of
What do you mean regulatory calendar? What do you mean by that?
So, for example, in Srikakulam, Dwarda, what is it that we expect in terms of inspections?
Prasad already responded to it.
I already said that several times. There's no calendar as such. The FDA has asked us for some information on Srikakulam. We are working on providing that back. We hope to complete their request in June. And after that, we have to talk to them about way forward. The Dwarda site has to be inspected. We've done a lot of remediation work, and the inspection request will go to them in end of June, early July. And then we will await a re-inspection.
Okay. Thanks. That's helpful. Thanks for taking my question.
Thank you. The next question is from the line of Rajesh Prasad from Wellspray. Please go ahead. Mr. Prasad, your line is unmuted. You may go ahead with the question. Rajesh Prasad from Wellspray, your line is unmuted. Please go ahead with the question. As there's no response, we take the next question from the line of Alok Dalal from CLSA. Please go ahead.
Yes, hi. Mr. Prasad, so if you look at the last 3 years for the company, it's been a very difficult journey. There have been investments made in R&D and compliance, but results are yet to be seen. So do you believe sometime in fiscal 19 will be a turnaround year for you, or you feel the company will take more time to achieve results?
I certainly hope to, complete this request that we have from the FDA by in this fiscal. I remain optimistic about the work we did. I think the delays have been due to probably some disconnect between the expectations that the FDA had and what we did. We are now completely engaged, and we hope that we can satisfy the regulator in the upcoming few months.
And, sir, any response on R&D? Because what we hear from the companies about, let's say, Nuvering and Suboxone, and those are acquired assets, whereas we don't hear a lot about internally developed assets. So, do you feel R&D, to some extent, the productivity is not there, and hence only these two names are being spoken about?
No. We don't tell you everything, and for competitive reasons, we don't disclose all our assets. We have a very rich pipeline. We have over 100 ANDAs pending, many of them first to file, many of them complex assets, both at the API level as well as the finished dosage level. The fact that we don't talk about them is...
So, sir, in the past... Sir, in the past... sorry, go ahead, please.
So we cannot disclose everything that we do for whatever reasons. We feel confident. Of course, there has been a shift in our strategy towards complex generics in the last few years. And as a result, there would be a little bit of a lull because complex assets are by nature difficult to crack. And there are a lot of work-in-progress assets as well as some which have been filed. And we will... as when they become public, we'll let you know about the progress.
Sir, in the past, company has done some very good products. Do you think that phase will come back for the company again?
Actually, the complexity of the assets we have today is multifold of what we had in the past. So I would say that the work in progress, the WIP R&D assets that we have are among the highest value that we ever had in the history of Dr. Reddy's.
Sure. And in between, you had people leaving you. And then there was some gap in the team. So those issues have been addressed now?
I don't think we ever had a gap in our team. We replaced the people who left with even better people.
Okay. So more or less you are saying it's more about timing now, that the company should be back on the recovery path.
Yes.
Okay. Thank you for taking my questions.
Thank you. Ladies and gentlemen, we take the last question from the line of Ranveer Singh from Systematic Shares and Stock. Please go ahead.
Yeah, thanks for taking my question. Just wanted to understand this gross margin in this quarter. We have separate that global generics and PSAI. So the remaining portion of gross margin, when I tally it with your reported number, is related to proprietary product. That's what the math is, right?
Yep. Proprietary products and others, yeah.
So that shows like some 98% of gross margin. So should I believe there's no manufacturing cost or raw material cost? There is a purely like a royalty or licensing type of income from there?
So there is what we have put is a $2.5 million of milestone. During this quarter we have accrued. I read out in the script.
Yeah, fine.
And further to that, there has been some milestone also in our Origin, which is a 100% subsidiary.
Okay. That's the only difference, I think. Okay, I understood. And another thing, in US now, what would be the contribution of top 10 products, if I say, or if you could give some, just I wanted to understand the product concentration vis-a-vis the last year we had.
Hello. So yeah, we can speak about this offline. I will guide you on that.
Okay.
Hello.
Yeah, but Sanof has said that he can take this question offline from you.
Okay. No issue.
Right. Thank you.
Okay, that's it from my side. Thanks.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Sonik Sarla for closing comments.
Thank you all for joining the call. In case if there are any additional clarifications required, please feel free to get in touch with the Investor Relations team. Thank you all.